Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. This is Saturday the 7th of January 2023 and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 1, season 9 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place on demand on your podcast feed.
Episode 1, season 9, Curtis.
Yes, our 9th year. Can you believe it?
I know, it's frightening, isn't it? It's like watching one of these long drama episodes on Amazon, isn't it? It's on episode 9 now. So
Yeah.
it's a long one, but no, Happy New Year to all listeners. So thanks for tuning in again and following us again in 2023. And hope everyone's had a fantastic rest and well-earned sort of festive period and ready for what could be yet again an interesting year.
Yeah, most definitely. We do have a few shout outs before we get to the headlines. If you didn't hear our special over the Christmas and New Year break, do check it out. So we did a used cars special podcast with Andy Condy from Mannheim Cox, Phil Jones from eBay Motors Group, and David Billsborough from Cheshire Cars, and we had a sort of 5-way chat, didn't we, about used car trends, how they shaped up towards the end of last year, and thoughts on going into January and beyond. So do check that one out because it was a fascinating conversation we had with those guys.
Yeah, feedback on it has been brilliant, and I think it was very timely in terms of sort of finishing off last year and what to expect this year, and obviously having that view, as you say, Curtis, there from David being in that sort of independent space, looking at it from a buying and selling perspective of used cars, Andy from a wholesale perspective, and obviously Phil Jones from looking at that retail marketplace. So yeah, please, if you've not listened to it, it will be on your podcast feed, and do tune into that one because it's very well worth listening, that one. And also, shout outs, stay tuned till after this week's midway break, where we'll be rejoined by Jeremy Yeh, who's the Senior Valuations Manager at CAP HPI. And he's going to be providing us highlights of the trade values trends in December and thinking about what happened, talking through, what happened through the full year of 2022. But more importantly, does share some insight and some thoughts of what to expect in January and beyond of this year.
And don't forget our newsletter. We'll be sharing all the URLs from this week's show on Monday morning on our new newsletter. So to make sure you receive the newsletter each week, just subscribe to it on LinkedIn at Motor Trade Radio Podcast.
Yeah, and if you do want to get in touch with us, as many people are doing at the minute, you can get in touch with us through any of the social channels with either Curtis or myself, or as Curtis said, the LinkedIn or Facebook groups, or you can email us at motortraderadio@yahoo.com. And, if you want to come on the show and share some thoughts on what you're up to and what you're seeing in the marketplace, or just send us one of your press releases that you'd like us to give a shout out to on the podcast, then please do get in touch with us.
And we always like to give a shout out to industry events. And I guess the next big one coming our way is the AM Awards. So entries actually opened last month and the deadline is the 24th of February. So it's around 7 weeks to actually get entries together. The ceremony is on the 11th of May at London's Park Plaza. And everything is set and ready. And once again, as ever, if you need a hand with your entries, then just get in touch with me. I'm happy to help listeners with entries, give a bit of advice, and do all that stuff.
Exactly. And there's no men able this week. Steve is taking a well-earned holiday just after the Christmas period, but he will be joining us again next week. So welcome Steve back in the new year with his men able moments next week as usual.
So, headlines this week are from BBC News, AM, Car Dealer, Automotive News Europe, and a first for the podcast, the Korea Herald.
Yes, and you won that
Yeah,
one, Curtis. You dug that one up from.
that one surprised you, didn't it, Phil?
Did that? Threw one in there, the curveball.
Okay, so headlines this week: new car sales hit 30-year low as EV demand grows, but new EV waiting times tumble as demand slows down. So those two appear to contradict each other, but
Yes.
we will explain.
Yeah.
There's another setback for Cazoo as the New York Stock Exchange suspends trading of Cazoo warrants and starts delisting proceedings. We've got the first acquisition of the year, which sees RRG and Norton Way owner acquire the non-franchised HPL car supermarket group. Renault Group boss says no to agency sales, branding the switch too risky. And we bring you news of which budget brand will be rebranding soon.
Feels like the same sort of things in the headlines yet again, Curtis. We've a couple missing on this one this week, but yeah,
Well,
it's
we've got EVs in there. We've got
acquisitions. We've got
rebrands,
agency. Yeah, we've got
agency,
yeah,
yeah,
yeah.
yeah,
Just need a
and
bit
an
of an exit
acquisition.
thrown in, and we'll be all right, won't we?
Yeah.
So maybe that's in the new car performance figures. But yeah, we are heading over to begin with to the story that broke in BBC News fairly early this morning and subsequently been followed up by many of the trade media, and that is the performance for the full year performance for the UK registrations for 2022 and December. But the headline is UK new car sales hit a 30-year low, but electric vehicle demand soars. So we know that the year has finished on 1.61 million new car registrations, which was the lowest level since 1992. December did, however, increase by just over 18%. But obviously, there's a lot going on in terms of that private business and fleet registrations. But more importantly, what's happening in that fuel type sector, isn't there?
Yeah, definitely. So those full year figures, so that's 2% down year on year, but very much a year of two halves because December did actually mark the fifth consecutive month of growth, but those 5 months of growth weren't enough to make good on the shortfall that we saw in the first half of the year. So full year, approximately the SMMT have worked out that the full year figures of 1.6 million are around 700,000 units below those pre-COVID levels of 2019.
Yeah, yeah, and obviously there's let's say there's a lot going on in that sales of electric vehicles, saying that the electric vehicles rose from 190,000 to 267,000, and that had climbed from a share of 11.6% to 16.6%. So still a lot of focus on that supply of electric vehicles, keeping up that market share for EV.
Yeah, electric vehicles were the real star of the month and the year. So
Yeah, and the UK's best-selling cars, which has sort of caught the highlight of many people, and particularly because it's a UK British-built vehicle, is the Nissan Qashqai, who were the UK's best-selling car of 2022, with 42,704 Nissan Qashqais registered last year, followed closely by the Vauxhall Corsa with 35,910. Very interestingly, the Tesla Model Y was in third position for the year with a sale of 35,551 vehicles throughout the year.
yeah, and did you see where the Ford Fiesta is? It's at number 10.
Mm.
And, up until last year, the Ford Fiesta was number one for
Mm.
as long as anyone could remember. So we know it's the time's been called on the Ford Fiesta, but it looks like that's going to drop out of the top 10 pretty soon.
Yeah, and Mike Hawes has been quoted in various medias today this week talking about obviously some of the challenges around supply. We're starting to see a little bit of supply coming into the marketplace, but it's at a time where demand has eased off slightly towards the end of the year. But positively, I think the key message is if the supply is coming, then there is a marketplace for that. for a product to be sold in the marketplace. So a lot to sort of see where we'll head for this year. I think the SMMT are currently forecasting that 2023 will see a growth in new car registrations up to at least 1.8 million, which feels about right. I think
Yeah.
the general sentiment that they will see some growth this year as supply starts to recover there and start to get some product into that fleet leasing and rental sector at the minute. So we'll see, but slightly different story for commercial vehicles, isn't there?
Yeah, so the commercial vehicles, so the figures, in fact, the figures are so new, they haven't actually been covered by anyone as we record this. So for December, the market was down 26% to just 21,825 vehicles. So the full year figure is down actually 21% to two 282,139 vehicles. So, yeah, the LCV sector, as we've been reporting every month, is really, really under pressure at the moment, and there's all sorts of supply issues there.
Yeah, and the interestingly, the Ford Transit Custom remained number one position for the month of December and for the full year, followed by the Ford Transit again holding both the second place for the year and the month, and the Mercedes Sprinter there in third registration position with 17,034 registrations throughout the year. So still a little bit of pressure on the LCV sector as this transition towards electrification is a little bit more challenging for LCVs than it is for cars at the minute.
Yeah, and before we move on to the next story, you had some European figures as well, didn't you, for some of the car markets
I
there?
did, yeah. Just bear me 2 seconds. So I mean, one of the things that has been stated is that 2022, the UK reclaimed its second position behind Germany, didn't it? Because
It did, yeah.
last year we got knocked off. I said last year, 2021, we lost place to France, I think it was, with fewer registrations. But this year we have reclaimed that second place of activity now with registrations. But yeah, I think Germany did perform reasonably well. Germany was up 3% year on year, but remained 25.2% down behind 2019 figures. France dropped 9.6% for the full year compared to previous year, but we're also down 32.3% compared to 2019 pre-pandemic figures. Italy, slightly worse, down 10.7% year on year and down 32.2% compared to 2019 figures. And Spain struggling a little bit less there, but down 5.4% year on year, but still 32.2% down on 2019 figures. So Germany seems to have performed pretty well at 2.7 million registrations there for the year.
Yeah, definitely bounce back there. So moving on to car dealer, the headline there is electric car waiting times tumble as demand slows down. So having just said that they accounted for a third of all sales in December. So this is based on research done by electrifying.com, which is the online electric car website, which I think launched only last year, but
Yeah.
they've been picking up quite a bit of press coverage, and they do analyse some of the data around EV sales. So what they've come up with is customers looking to place an order in January will be waiting an average of 28 weeks for their new battery electric vehicle, and they calculate that's actually down 13% from the 35 weeks that was being quoted as recently as October. And why are the wait times getting shorter? Because they say that demand is down, and that's largely driven by the cost of living crisis and concerns over high energy bills.
Yeah, and founder and CEO of electrifying.com and our friend Ginny Buckley said that the news that waiting times are decreasing by a significant amount will be welcomed by many. However, it also signals a change in consumer behaviour driven by the cost of living crisis. So yeah, sort of reiterating what you just said there, Curtis, with Jeannie saying that it's that short lead times is positive, but actually it's more about that slower demand and order take coming in for product, that those lead times are shortening, unfortunately, at the minute.
Yeah, and she does make an interesting point about that the way to address this would be for OEMs to concentrate on some of the entry point models and cars priced under £30,000. So that's the sort of smaller than the SUVs that are obviously so popular amongst EV customers, but get the price down and help stimulate the market.
And staying with car dealer, it's been talked about quite a bit this week, as it always does, Curtis. But headline is that New York Stock Exchange suspends trading in Cazoo warrants and starts delisting procedures. So, there's been a lot of chatter about the share prices of Cazoo over recent months, and that they've been dropping significantly on that New York Stock Exchange and everything else. But this story is quite an interesting one here, because they talk about the warrant on the business that's on the stock exchange, and it's not quite that simple, is it? As when you start to read into it in a little bit more detail.
No, it's not. And it's worth pointing out that this comes just 18 months after Kazoo's initial listing on the New York Stock Exchange in August 2021. And apparently, Kazoo can appeal this decision. But this is really, as you say, based around warrants. So it's not the Class A ordinary shares, and they will continue to be traded and listed on the stock exchange. But the company's share price, as a result of this, was actually up 13% to 18 cents, but obviously still at a very low level. But however, shares have fallen by 96.5% in the last 12 months. So it's showing some of the concern there around the stock exchange.
Yeah, and Mike Jones, obviously ex-ASE, who's now an automotive industry analyst and compiler of the car dealer top 100 list, has said it doesn't look good. When Cazoo listed, they issued a large number of warrants as part of that process, and these could be traded like the shares, which they effectively said that the warrant holders could buy the shares at, say, $11, but they are currently trading at 18 cents, so they wouldn't be exercised. So that's quite an interesting way of operating it.
Yes, yeah, and that's one hell of a drop, isn't it?
Yeah, $11 to 18 cents.
Yeah,
It's a bit
yeah,
of a drop.
yeah. And Mike goes on to say that Cazoo has been told they need to improve their share price or they will fall out of the NYSE completely. And as Mike says, that really is the bigger issue. So lots more to come on this story, I suspect, over the coming weeks.
Yeah, it feels like we're going to see that back in the headlines for some time to come yet, isn't it, Curtis?
Most definitely. Yeah, you're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up, we're delighted to welcome back to the podcast Jeremy Yade, Senior Valuations Editor of CAP HPI, joining us to talk about how trade values performed in December and over the course of 2022. So welcome back to the show, Jeremy. How's life in the world of valuations? I understand it's been a busy week for you already.
Hi, Curtis. Yeah, thanks very much. Thanks for being back on the show. Yeah, busy as always here at CAP HPI. Things moving in all different directions, which we'll go into some detail. But yeah, really good. Thank you.
Another year to start comparing against now, compared to last year and other years. But yeah, it all
Absolutely.
starts again. All starts again, and
Yeah.
it doesn't sound like it's going to be much of a different year, does it? To be fair, but we'll get into that. So,
No, I think, yeah.
I mean, obviously, welcome back, and it's great, and happy New Year to you and everybody listening and at Cap HPI. So, I mean, obviously the figures have just come out around, that sort of the latest figures for December going into the month of January. What is the headline for the 3-year 60 figure for the month, and how does that compare to previous Decembers?
Okay, so 3 years, 60,000 miles. The headline number, the drop this month, well, from December into January, product is 1.5%. That is more or less bang on the average of the 5-year average of movements from December into January, and feels very seasonal. It feels like a very stable and seasonal market. There are some exceptions in that, which I think we'll probably go into it in a bit. But overall, yeah, it feels like a pretty stable market overall and very seasonal in the run up to the festive period.
And do you think, I mean, in terms of looking at the full year, what's your view on the overall trend for 2022? Because that, although the whole year was completed from the November going into December, but we've kind of the year is closed off now for 2022. Any views on that sort of the trends over the year of 2022 and how that compares to previous years?
Yeah, so I mean, if I give you the figure of cumulative figure, which is a 3-year-old car from the start of the year to a 3-year-old car value, same basket of cars at 3 years 60 to the end of the year into December, the headline figure there is 3.1% drop, which is very, very strong overall, very stable. I think it highlights a very stable market, especially when you consider coming off an exceptionally unprecedented year from the year before, coming in at over 29%. So to only have a 3.1% drop overall is really highlights the fact that we've had a phenomenal year again. And considering the headwinds that the market has faced in economic turmoil, etc., to end up at 3.1% is pretty good. And I think to put that into context, a normal depreciation would be between 5 and 6%. So it is less than what we would consider a more normal year, although we've probably all forgotten what that feels and looks like now.
And Jeremy, before we talk about fuel, because I know that's an area of interest within this month's editorial, can you just tell us which vehicle sectors stood out in terms of rises and falls in December?
Yeah, sure. So sticking with the same age and mileage point, there was the strongest mainstream sector was MPV. That dropped 0.7% and £124 overall, which is again, less than half, slightly less than half than the overall move. And then if we go to some of the hardest or the strongest downward movements, we've got convertible, very seasonal, down 2.5% or £630 overall. And then we've got sort of the more mainstream sectors, I guess, of lower medium, the hatchback sector, which I look after. That's down 1.7, circa 250 quid. And then you've got Super Mini, which is down 1.9, but not even £200. So SUV, that went down 1.7 to circa £400. So more or less, like I said, bang in line with the seasonal averages. So nothing untoward there, I would say, overall, and feels, again, very stable and seasonal.
Yeah, I was going to say exactly the same. That does feel very, very seasonal. And really the same question for age bands. Did anything stand out this month in terms of some of the age profiles you analyse?
Yeah, so if we go younger, if we start at 1 year 10K, that actually dropped more than the average of 3 years 60. That dropped overall across all sectors at 1.7 or circa nearly 600 quid, £591 to be precise. And then within that, the movements are very similar to the ones I've just said for 3 years 60, although slightly larger. So lower medium, again, the hatchback sector, that was down 1.9, and that's down circa nearly £500. MPV, that was again the strongest one at 233 or 0.7%. Super Mini was down slightly more at 2.1, but again £400. SUV was down 1.8, circa 650 quid. If we move out to the older age groups now, the older cars have actually been slightly more desired, I think, within the market. 5 year 80, that's down 1.4 or circa £175. Then 10 year is down less again, it's down 0.8% or just a minimal move of circa 50 quid. So it's the older, more cheaper cars in the market, which I think have fared a little bit better than some of the younger vehicles.
And looking at fuel, because it is highlighted within the editorial, there's some interesting trends around EVs with values falling again month on month, and this time round it's down by 5.2%, which I think equates to around £1,625. Can you give us a flavour of maybe how Tesla performed compared with some of the more mainstream brands over the course of the month?
Yeah, sure. I mean, EVs have been under pressure now for a good 3 or 4 months. I think this is the fourth month in succession where we've seen some larger than average move drops just for a certain fuel type. I mean, you mentioned Tesla there. Tesla's actually dropped at 3 year six. That dropped to 9.6%, and I think that was around just over £3,000. So, and that's on top of previous moves of sort of 5-6% in previous months, in November and October. So there has been some pressure, some price realignment, I would say, within the EV sector, and that's what really sticks out really across the market. There are, I think, some more, there's slightly less desire, let's say, from the consumers and probably from the retailers. Retailers, I think, are probably not selling them as quickly as what they'd like. Maybe they are trying to discount and trying to get some movement on those vehicles, but I think that's proven challenging, and I think that's just reflected in the trade sector and the wholesale sector. So I think it's been interesting to view and to dissect, if you like, but it continues to move and continues to move down. But then they've been so high for so long, so there's going to be some realignment. It's probably just come a little bit quicker than we anticipated.
And with this realignment and this downward movement on EVs, do you think that will prompt more demand for used EVs in the market?
I think we certainly hope so. I think there's got to be some price realignment to come. Like I said, I didn't think it was going to happen, or we didn't think it was going to happen quite as quick as what it has. I think with there's some sizable moves and with thousands of pounds coming off them, maybe they will look more palatable now, not only for the retail consumer but also for the wholesale buyer as well, after they've sold what they have in stock. So they certainly need to. They certainly needed to come down, I guess, based on the high price point. But they will find their own place in the market and they will sell. I think there will be more demand. It might not be just yet. It might be in a few weeks' time or in a couple of weeks' time. Who knows? But that's going to be translated at some point soon. And let's hope that sector or that fuel type, if you like, will get back to selling well and clean up the atmosphere, which is, I guess, the what the government want trying to achieve, or what we all want to try and achieve.
Yeah, and just finishing off on fuel, any trends around diesel and petrol over the course of the month?
Yeah, so diesel and petrol, they fell, but again, bang in line with the seasonal average. So diesel dropped 1.3% to 3 year 60, and petrol dropped 1.5. Hybrid, pure hybrid, self-charging hybrid, if you like to. They were down 1.6. It's the plug-in hybrids went down a little bit more at 2.2 at 3 year 60 again. So, but no great shakes. I would say nothing more than seasonal moves on the rest of the more volume orientated fuel types.
And just thinking about obviously the retail sector and your conversations with dealers around the sort of stock levels and consumer demand. I mean, we obviously, throughout December, there was a lot going on from a cost of living perspective and the energy crisis. But, we've not had significantly bad weather, I suppose, for the time of years. What were the dealers telling you about that sort of stock levels? Because I think last time we spoke, dealers were holding back from stocking up too heavily for the first quarter of the year. What's happening out there at the minute? What's the general feeling out there with the dealers?
So from the large amount of dealers we do speak to on a regular basis, they're all pretty much saying the same, that no one's really stocking up for January or didn't through the December period. And I think, it's going to be interesting to see what the next couple of weeks or 2 or 3 weeks or the whole of January holds in terms of, is there going to be some more interest and some more buoyancy in the market? But in the run up to January, no one was really looking to stock up heavily. I think people carried, fairly decent stock levels through the period, knowing they weren't going to sell as much. But I think, that's just based on consumer demand, and with consumer demand being muted, I guess, for the back end of the year, and as we hit the winter and obviously bills going up, etc., it's no surprise. But, the ones that we've spoken to have said they've done okay. What they've sold, they've done okay with. Is not as many as they would like, but it just felt very seasonal. So again, that seasonal stability, I think this just translated quite well into the trade market, the wholesale market.
And we're now a week into the new year. Any thoughts on how values you feel are likely to perform? I mean, in January and beyond, the whole crystal ball. I mean, you just made the comment there that we know the dealers weren't really stocking up pre-Christmas, where they would normally sort of go above sometimes their standard stocking levels. And I suppose it was all a matter of so much uncertainty around what consumer demand would look like. And the question is going to be is if the consumer demand does start to return, is there enough product, and what will that do to value? So what's your view on how we're going to sort of start to look at the next sort of the month of January and maybe into February?
I think I'll start with January. I think January is more likely to look something a bit like December, similar in terms of potentially movement. It might not be quite as heavy as a 1.5%. It might be a 1% or less, and that would fit, within the average of the January to February movement. I think beyond that, I think it's very difficult to tell right now. I think the jury's out in terms of, are we going to get that bouncing consumer demand? People will still need cars. Cars will be sold wholesale and retail. And I think, we're still in just for probably a bit of a stable market based on that low supply coming in. But there are some manufacturers who have been fairly active at the back end of the year, and there might be some EV manufacturers, especially within that. And there will be some, we're going to be active going in the build up to March. It might not be quite as busy going for February and January in terms of registrations. So we might see a bit of an increase in March, or a bit more of an increase. But I think until that new car supply really comes on in more of a volume orientated way, then I think we're likely to carry on seeing a fairly stable market. I would say there will be some variations with it, clearly, and that might differ by fuel types as we've previously seen. So, but overall, I think we're predicting it's going to be a fairly stable market, volatile, but volatile doesn't necessarily mean sort of poor.
Sounds like much of the same.
Exactly that.
Yeah, well, that sounds very encouraging, Jeremy. It really does, and I'm sure listeners will be reassured by that. But before you leave us, can you just let listeners know how they can get hold of the latest editorial?
Yeah, sure. So the best way to probably get the editorial is go onto the CAP HPI website. Look for editorials. All the historic one and the current one is on there. Or if you've got a product like Valuation Anywhere, there's an editorial button to the top right hand side. Click on that, and that will take you directly into the link, which is almost a direct link back into the website anywhere where you can find the editorials.
And you've also got a webinar coming up towards the end of the month on the 26th of January, and that'll be looking at car and van forecasts. How can listeners sign up for that?
Yeah, so that will cover off the current market and forecast for both LCVs and cars. That is on the 26th of January, and that's at 2 p.m.
Great. And they just need to go over to the CAP HPI website to find out details.
You can find the link. You can save it. You can save it to your Outlook calendar, and you can and then the link's in there, and you can save it down and link in on the 26th at 2 p.m.
Yeah, through the normal social channels, and editorials are published as well through them normal social channels. So I mean, appreciate you giving the time up today, Jeremy, and I know you've sort of battled on through there after catching a bit of a cold over the Christmas break. So thanks for that. And I mean, again, just summing up what Curtis said there, it gives a lot of reassurance that it seems to be much of the same. No kind of signs yet of significant price drops. And as always, and Darren mentions this each time, is that it's key to get the devil's in the detail, as always now these days, particularly with things like those EVs and everything going on. But actually, it's about live and keeping an eye on what's happening on a day-to-day basis rather than monthly at the minute, isn't it? You've got to keep a close eye on the data.
I think live is key for buying and selling, and that's retail trade or whatever. It really is, and the devil is always in the detail. There's always variations even within sectors, not just fuel types and what have you. So yeah, definitely. If you haven't got live, I would definitely say you need to look at live in terms of making some business decisions on the here and now. And yeah, that's why that latest timeline is very important, I think.
Definitely. Well, just me to say thanks for giving up the time. Thanks for coming back on, and thanks for sharing sort of a little bit more detail and insight in terms of the latest movements in the market. So, and look forward to having you back on in next month. So,
Yeah,
appreciate it. Well, take care, Jeremy, and stay well. I hope you feel better soon.
thank you very much. Thanks for having me on, guys, and happy New Year to both yourself and to all our customers as well. Thank you very much.
Yeah, many thanks, Jeremy. Well, some great insight there, Philip, from Jeremy Yeh at Cap HPI, and he did very well because in our pre-chat with
Yeah.
him, he was a man suffering from a cold that had been going on for a number of weeks. So he did very well,
He
didn't
held it
he?
in all the way through
He
there. I
did,
think,
yeah.
yeah. We will say that he got to the end of the interview there, and he did start to cough. He did very well holding that in. So, and again, as you say, Curtis, always very insightful there, and sort of airing a bit of sort of comfort. Would we say that,
Yeah.
they're not seeing anything significant? It seems to be more of the same that we've been experiencing over recent months, and there's a lot going on at the minute, both in the industry itself and the economy, but more an air of sort of stability from Jeremy there, and expectations around what's happening with the values. And as Jeremy said there at the end of the interview there, that there is a webinar 26th of January at 2 p.m. That will be on the social channel feeds if you want to sign up for that, of where they'll share a little bit more detail around the outlooks for both cars and LCV. So we're returning over to AM Online here, and this is the first acquisition that Curtis mentioned earlier. And this is Radcliffe Road Garages, RRG, and Norton Way, who are owned by Marubeni Auto Investment, that have made the first purchase, and the supermarket, which is a 3-site used car supermarket business that many, particularly in the northwest, will be aware of, with HPL Motors Group. So a fantastic opportunity this for RRG, buying those 3 quite significant supermarkets.
Yeah, so the supermarkets are in Preston, Oldham, and Atherton, and
Alberton. Well,
oh,
I'll get you your Manchester twang in there for you.
yeah, no, thanks for that, Philip. Yeah. Thanks for the northern translation.
Translation there.
Yeah, so it's worth just highlighting that Marubeni Auto Investments. It's actually headed up by Chief Operating Officer Jason Cranswick, who'll be familiar to a lot of listeners from his days at Jardine and more recently at Cinch. So Marubeni as a group, they're Japanese owned. They acquired RRG back in 2000 and Norton Way in 2008. So this is a return to the acquisition trail, quite possibly from Marubeni as they start to look at some UK businesses. But HPL, what a great acquisition! So there's a quote in this story from founder Jonathan Herman, who will actually retain a minority shareholding and continue to. In his position as managing director with HPL. And he says, I'm excited to join the Marubeni family and can see how HPL will really complement the current Marubeni group structure. And he goes on to say the synergies of being part of a leading UK automotive dealer group means that we will be able to develop our combined businesses into incredible mobility provider for the future. So, very upbeat comments there from Jonathan Herman.
Yeah, it is. It's great. As soon as I saw that news break, I thought, what a fantastic fit. One, from a geographic perspective, in terms of the representation from RRG and HPL there, but also sort of adding that supermarket element in and expertise, and they'll both learn from each other. I think the synergies are superb. So I'm sure once that gets in sort of onboarded, then we'll see a lot more from these guys, and potentially probably not the first of many more moves into that space. But we'll look forward to seeing that one grow. we're heading over to Auto News Europe now, and getting back to the subject of agency model, Curtis.
Hooray,
What wasn't
hooray.
long, was it?
No.
And this has come from an announcement and from Renault, and says why Renault isn't ready to switch to agency sales. So this is that Renault Group CEO Luca De Meo said that the risk of holding billions of euros of inventory outweighs potential gains from lower distribution costs and better control of pricing. But we were talking before the show about this one because this is quite an interesting one, that they do talk about what's happening in the world of Dacia, which is obviously part of that Renault group, and the way they operate in the marketplace.
Yeah, because Luca De Meo makes an interesting point that when Dacia launched, 6, 7 years ago, whenever it was in Europe and certainly the UK, that it pretty much operated on an agency model because it launched with the no haggle policy, and it was pretty much predominantly retail. So it was agency in all but name, which De Meo actually says, we didn't call it agency, but that's pretty much what it was. So Dacia will continue as it is at the moment in that particular model, and so will Renault. Renault has no plans to change to agency, so quite an interesting development there. And I think one of the it's always interesting to hear from the OEM perspective, because certainly last year we were hearing a lot of kickback from some of the dealers about agency plans, but this is Renault making it very clear from the start of this year that there are no plans, because Renault as a group, it sells 2 million vehicles a year, and it doesn't see the financial benefits of holding that stock and stopping its dealers from making money on margins. And it's an interesting piece that it's worth having a look at, because De Meo does really fight for the dealers in this story, because he points out that they need to make a margin, and unless they're selling something unique, they need to have that flexibility of having a margin and negotiating on price as and when they need to.
Yeah, and it does. I mean, they start off talking about obviously the big names such as Audi, BMW, Cooper, Mercedes, Stellantis Europe, and VAG or VW brand, sort of making these sort of muted moves towards agency. We know Mercedes have already gone with it, and Cooper have already gone with it, I believe. So, there's a lot going on in that space, but when you do talk to market commentators around agency model and the pros and cons, one of it is obviously around negativity towards the OEM about that cash flow, that availability of cash and that use of capital. And it does make a statement here that as a company in a sector that has a problem generating cash, to have that working capital around your neck with all the risk of market volatility downturns, it's a very risky game. And it kind of makes a little bit of sense there, because you're taking all that cash off, that risk away from the dealer network and taking it into the OEM space, in addition to everything else that the OEM is dealing with. It's quite an interesting statement, so we say, from an OEM perspective on that. And they talk about obviously bearing the cost of all the marketing and return for that higher profit return on sale is this balance that the OEMs have got to work out for themselves.
Yeah, and De Meo does actually make a really interesting point about that no haggle policy that we were talking about. He says, you do agency because you want to control the price and you want to cut distribution costs. So you give a 5% margin to the dealer. There's no discount, but you need to have a very unique product not to offer discounts. So a very sort of pragmatic approach, I think.
Definitely. So we're going to obviously see more of this as we move through the year, I suspect, particularly those from the OEMs that are either moving or not moving for whatever reasons. But the final story is one that Curtis has dug up from somewhere here, which is the one in the Korea Herald. I didn't know such a media house existed, but I suppose why not? And this is SsangYong Motor, to change name to KG Mobility. So again, I think you made a point on this story that I don't think we covered the latest acquisition of SsangYong, but it has had a few over the years anyway, hasn't it? And trying to keep up with who owns SsangYong has probably been a bit more challenging compared to other brands.
Yeah, SsangYong as a brand, we do actually talk about them on a sort of ongoing
Mm.
basis, and it is interesting. Their ownership has been quite a story in itself, because it's been owned by the Daewoo Group, if you remember that far back, Phil.
Yes, I do, unfortunately, yes.
Yeah, yeah. Shanghai Automotive,
Yeah.
and more recently Mahindra. But there's some KG Group, which is a chemical and steel conglomerate. They acquired a 62% stake in SsangYong Motors last year, and as a result, they became the largest shareholder after the Seoul bankruptcy court approved the car maker's corporate rehabilitation plan back in August. So they helped buy them out of that, but they've obviously been running the rule over the business. And one of the things they've looked at is the name, and is there sufficient equity in the name? And they've decided there isn't. So SsangYong will be rebranded at some stage to KG Mobility. And within the piece, it's quite interesting, because the chairman of the group is actually quoted as saying, well, they looked at dropping just the motors bit of the SsangYong name, SsangYong Motors, as it evolves
Mm.
into a sort of EV mobility brand. But they then decided, well, that wasn't quite enough. So they're dropping the SsangYong part of the brand as well. So that will reemerge at some stage as KG Mobility.
Yeah, it's more for the dealer set to get the head around on this one then, Curtis? But
Yeah,
I
more
think
signage.
more signage, more investment. But I think those operators that do have SsangYong either as the main franchise or a secondary franchise do very well out of it. I mean, they've done some good products over the years that support their dealer network very well. So it's been very positive over the years. So I expect to see a little bit more from these guys as they sort of rebrand themselves and start to sort of focus on further growth. But I think that's it for this week, Curtis. We've trying to cover off a bit there. Very mixed first podcast of 2023. Clearly, as the interview there with Jeremy pointed out, seems to be much more of the same. Acquisitions and everything going on in EV, and challenges around registrations and things like this, and agency model still high on the agenda. But hopefully, we've covered most of the major stories of the week.
We have indeed, and bearing in mind we're only a week into the new year, there was no shortage of headlines.
Yes.
So we've hit the ground running in 2023.
Yeah. So as I say there, if you've not listened to the interview with Phil Jones, Andy Condit, and David Bullsby, we covered off just before Christmas there, then I would suggest having a listen to that. And obviously, you've got the interview there with Jeremy Yeh partway through today's interview. And as we said right at the start, Stephen Whitton from Menable Moments will be returning to us next week. So stay tuned for that one.
And as ever, all of this week's headlines will be available on our LinkedIn newsletter, which is available on Monday morning. But that's all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. It's goodbye from me.
And it's goodbye from him.